After a bruising year for silver and a roller coaster ride for gold, what is ahead for precious metals in 2012? Well, that's why we bring Gijsbert Groenewegen on. He is co-founder and managing director at the Silver Arrow Capital Fund. You've been a longtime gold investor. It's great having you on.
Thank you.
Yeah, and what's also kind of unique about having you come on is you call them like you see them. So help us understand, help the viewers understand why, with all the uncertainty in the world right now, gold is not actually up more than it is.
It's a good question. The reason is that gold is denominated in US dollars. So when the dollar goes up, all the precious metals or other metals or commodities in general go down because the dollar gets stronger. Yeah, it's the comparison to all the other currencies. So that's the only reason why, in my point of view, gold and silver goes down. It's very contrarian, as you said, because it's the only safe haven in a way with intrinsic value. JP Morgan said, you know, gold is money and everything else is credit or credibility. I mean, it's basically the same thing.
But the thing is, I mean, there have been, you said that it's that dollar linkage, or reverse linkage, actually.
Sure.
But we've also seen gold go down sometimes when the dollar goes down. It's those days when people don't want to own anything, so they sell gold.
Yeah, but what I think is going to happen, I don't think that the problems in Europe are solvable. I mean,
they're not solvable, or they're not solvable near term?
Both. Yeah, near term is purely, you know, people trading on the headlines. Yeah, if you see that the banks have borrowed 589 billion from the ECB at 1%, yeah, that is not. You don't solve the problems by that. The only thing you do is increase the liquidity because the markets had frozen up completely. Yeah, but it doesn't solve a budget deficit. It doesn't solve, you know, your overall debt burden. I mean, look at Italy. We have $1,900 billion in debt. So if you save 10 billion on an annual basis, what is that going to do for your overall debt level? Nothing. Yeah. So I don't think that the problems can be solved. You would need at least a haircut of, say, 80%.
80?
80% of all the debt in order to reduce it, which is not feasible.
Both the sovereign and the bank debt in Europe?
Yeah, it is, because
and it's pretty safe to say that's not going to happen if they won't even take a write down on Greek debt.
Exactly. You know, the banks and the sovereign states are interlinked. You know, one affects the other. If the banks are being downgraded and need to be rescued, then the sovereign state gets the downgrade on its rating because it doesn't have the money to rescue the banks. So they both interlinked. Yeah, and they both basically one and the same unit.
All right, so let me ask you this, because at the end of the day, you have to try to make a living by making money on trading these metals. So how are you trading for 2012?
So what I think is going to happen...
By the way, unfair, but we've only got about a minute.
All right. Well, what I think is going to happen, I think that Europe won't be solved. The dollar will get much stronger. We'll go to par with, you know, the euro. That will mean that gold and silver could come down pretty dramatically. Gold could even come down to 1,000, 1,200 and a spike down. But I think when you have seen that unwinding and the dollar getting much stronger and the treasuries, for the wrong reasons though, because there's a flight to safety and there's
away from the euro.
Exactly, because the euro gets weaker. I think that when that has played out, then suddenly you will see that people will say, well, listen, why do I own the dollar? Why do I own the treasuries? The situation in the US is nothing better than in Europe. I mean, it's nice to fixate at the moment on Europe, but in the US we all know, I mean, we are already looking at the next debt ceiling, basically. Yeah. So what will happen then, I think, is that at that moment people realize that the only place to be will be physical gold and silver, and at that moment gold will go through the roof, and you could see $3,000, $4,000, $5,000 an ounce.
So bottom line, you are a buyer of gold and silver on the dips. 1,200 on gold, maybe 25 bucks on silver.
Yeah, 20 on silver. But I think from A to B, you know, it's no discussion where gold and silver will go to. They will go much, much higher. Silver will go to $100, $200, $300. The question is how it will go there. And that depends on the events. It doesn't depend on the time.
All right, Gijsbert Groenewegen, I wish we could have you on longer, but thanks for coming. We'll be talking about gold plenty in the new year. Gijsbert Groenewegen of Silver Arrow Partners.